What's going on, everybody? Yashua Suarez here with Edge Realty, and this is another episode of Edge Realty Podcast, where we're trying to give you all the ins and outs of our local market here in the Central Arkansas. Today, we've got some awesome guests today. They've been here before. They're back again. I love it when they're here. This time, I don't think we've actually had both of you on together before. First time together. So, got to welcome the Lyles Team from Sente Mortgage. Thank you guys so much for being here.
Appreciate you for having us.
Thanks for having us.
Awesome. All right, so we're already kind of getting into quarter two in 2024. And, you know, it was a lot of stuff that we want to digest, a lot of stuff that we could talk about. And I know with y'all, we can talk for hours about this. But let's see if we can kind of give some cliff notes to everybody out there of what's going on in the market today. Let me know, kind of, you know, just kind of give me an insight of what you guys feel has going from 2023 into quarter one of 2024. What's your thoughts on how the market's going?
Go ahead, you can take it.
Okay. I think 2023 was terrible. So, you know, if you're a real estate professional and you're like, that was horrific, then you were correct in thinking that. So it was a very, very challenging year. We had, you know, really not a lot of inventory, not a lot of new construction starts. Rates peaked like at 8%, which was, you know, panic inducing to a lot of people. So you had multiple things, lots of uncertainty. We got through that. That's the great thing. And so now we got through almost past quarter one for 2024. From our perspective, we're really seeing a rapid uptick in applications and borrowers actively looking for a home to purchase. So maybe like, you know, 6 or 7 months ago, we can really kind of see the tone of how the pace is going based off the applicants that are just reaching out to get pre-approved. So you can kind of gauge the activity just off of the pre-approval process and the number of applications that are coming in. So those were way, way down, like quarter three for 2023, even quarter four was kind of bad. We're really picking up a lot on the number of applications and the number of home buyers that are applying. So I think that the market has kind of accepted that we're probably not going to see 2 and 3% rates again.
Yeah.
That it's better to go ahead and buy now if it makes sense, because, you know, those prices are not going to stay the same. They're going to continue to go up, and then refinance if you want to when rates drop. But I think we're just kind of coalescing. People are getting more comfortable with where we're at in the market, the prices being where they are, and the rates being where they are. But having said that, they're coming down from where they were in quarter four.
Now, when you say coming down, what do you predict, or what's been going on in in those vibes of people like that are in the higher ups saying that you know, what does that mean? Like,
so the Federal Open Market Committee meets, and they sort of make the decisions on what the Fed target rate's going to do. Everything that they are telling us is it's data dependent. So based off the numbers that show the marks for inflation can kind of gauge whether or not the Fed's going to cut the target rate. The good news is they've come out and clearly stated we're done with hiking the target funds rate. So we're looking at 2 to 3 cuts starting in June of this year. But that doesn't mean we're going to see rates go from 6.5% to 5% overnight. There's a whole lot of different factors at play there. The good news is that the Fed has said they're not going to raise it anymore. That kind of takes the heat off of the uncertainty from the bond market, so it can kind of find a stasis.
Yeah.
And that's what we need to get back to, because it's not necessarily the information that stresses everybody out. It's the uncertainty in that decision making and where it's going to go.
Absolutely. Okay. All right. So I know for us, like, we always get the question of, you know, how's the market, or is it a good time to buy? Is it a good time to sell? Do you all still get that question as well too as lenders?
Oh, we do. And you know, kind of going back to what you were speaking about a minute ago with 23 and 24. We always try to look at it and tell our realtor partners and everybody in the industry, you know, you can't control what the market is doing. So, you know, attitude has a lot to do with it as well. As Steph said, we went through 2023. I mean, I think it went down as like one of the worst years in 40 years.
It was just challenging.
It was horrible.
All around, yeah.
But we take the mentality now. Look, if you're still in the industry, you made it. You made it. And I was reading a thing the other day. I've been following this guy for years and years and years, and statistically and all looking at it. They're anticipating that 2024 may be one of the top 3 mortgage years in history too.
Oh wow!
As far as
So,
originations, yeah.
The thing is just continuing to do what you do, continuing to put in the effort, continuing to reach out to clients and to help people. As far as getting the question, buy now, buy later, it goes back to kind of what Steph said. If you want to buy a home and you're in a position to buy a home, the good part about it is, if you look at it from an appraisal standpoint, from a value standpoint, the bank's not going to loan you any more money than what the house is worth.
Mm-hmm.
So really, I don't look at it as you're overpaying. There's no reason for the market to start trending down because we're still in a huge supply and demand scenario. You've got a lot of people wanting to come in the market and buy. A lot of those houses got purchased during COVID years when it was so busy. So it's never a bad idea to buy. One of the things, terms I've heard before, if you're paying 7% or whatever the rate is, but when you're renting, you're paying 100%.
Every time.
That's one way to look at it. And it's a way to start building your life, and building some equity.
So it's interesting because that's kind of what the type of conversation that we always try to have is, I do love the fact that people will come and ask us, how's the market?
Right.
Is it a good time to buy? Is it a good time to sell? And I'm like, that's a great question. Tell me your story. You know what I mean? And I'll tell you if it's a good time to buy or sell.
Mm-hmm.
You know what I mean? And so when it comes to that situation, I think a lot of people kind of get the misconception of, if it's a good time to buy, it's a good time to buy for everybody. If it's a good time to sell, it's a good time to sell for everybody.
That's right.
That's not the case. The case is a case by case basis, and it's got to be. We have to delve into your situation to be able to know that.
Mm-hmm.
A lot of people aren't as open to, open that case of what their situation is personally, financially. A lot of times that's a really hard conversation to have, but I think that's something that we have to make normal. Let's make that normal. You know what I mean? Like we were doing the podcast the other day for the JC Golf Foundation, and I was talking to Katie on there. We're talking about trying to get tested for for colon cancer, and we're trying to say normalize talking about poop. Let's normalize the conversation.
Right.
You know what I mean?
Yeah.
But it's kind of it's a personal thing, and we get that. A lot of people may not be quote unquote. They might be embarrassed about that type of conversation, but for someone to truly help you, we got to know what's going on.
Exactly.
Same
and
thing.
It's very, so think about it this way. Rent has gone up as well across the board. Mm-hmm. And most landlords, whether that's a commercial apartment complex or a single family home, if they have a mortgage on that property, you're paying someone's mortgage for them. So yeah, $1,500 rent payment sucks to make that. Mm-hmm. $1,500 house payment probably sucks to make that as well. But the difference is after 5 years, you've got all of your money tucked away in the equity of that property instead of paying someone else's, i.e. your landlord's mortgage for those years and building equity for them. You can flip that scenario, own your own home, and put that away for yourself.
Absolutely. It's the investment.
And go through history, man, where rates were crazy at one time, 17.5%, 18% years and years ago. When is there a time, as long as you've taken care of the house, you've lived in the house for a while, what else can you own and live in for 20 years, 30 years, 10 years, and turn around and sell and make money?
Mm-hmm. Exactly.
There's not many things. Even when the rates were crazy high, right? Because you can always go back. As we know, the market fluctuates. Rates go up and down. You have the option to refinance.
Mm-hmm.
So I tell people it's one of the only things that you're going to actually have the possibility of making your money back on at some point.
That's
right on. Absolutely.
And I've looked at so many clients' finances over the years, and we're talking over a 20-year period of seeing this. Mm-hmm. The fastest way for any individual to build wealth is through real estate.
Amen.
Okay, so you might have had someone who owned a home during the 2018 to 2020 period. They could have sold that home. Maybe it appreciated $50,000. Suddenly they've got $50,000 that they didn't have to either put in another home and pay that up, take some of that $50,000 and invest it elsewhere.
Yes.
The thing that people don't see is the increase on the value of real estate is still historically the best way to build wealth.
Absolutely.
So I've seen many, many, many clients that went from not having much cash at all to pretty, becoming pretty wealthy on paper, at least, because they bought and sold a piece of real estate.
Right on. And that's another conversation that we love to have as well
Yes.
too, especially for like first time home buyers a lot of the time, or maybe somebody that has kind of gone through a transition of, owning to then renting to, and then maybe hopefully back to owning, is, playing the long game.
That's
Playing
right.
the long game to be able to put yourself in the position that you do want to be in, that makes you reach your goals that you want later on in
Correct.
life. You know what I mean? And I think that's another conversation that a lot of people don't, or a lot of realtors may not have. It could be just be from experience, lack of experience, but that's something that we have to open people's eyes to as well too, because a lot of times they go into it and they're like, okay, it's got to be perfect. It's got to be the exact home that I see myself in here for 30, 40 years. No, if you're a first time home buyer, especially if it doesn't matter your age or anything like that, but if you're a first time home buyer or somebody just hasn't owned a home in a long time, then get into something that is going to work for you, that has the market trends to bring your value up and also bring your equity up later on as
Exactly.
well too. As well as bringing, trying to get in there and put some sweat equity into it.
Yeah.
Correct.
Because then it'll get you to where you want to be later on.
So, I mean, reality is you're paying a mortgage regardless. It's either going to be yours or somebody else's.
That's right.
I mean, that's the way to look at it, and it's not the right time for everybody to buy. You said it right there. It's an individual thing. What's your story? Where are you at in life?
I've had to have that conversation with
Yeah.
people.
We have
say,
too.
it's probably not the best time for you right now. You just don't have enough equity in this house, or you just don't have the funds or the history or the credit, whatever it is. It's just we've had to have that conversation.
Yeah,
before.
but that's honestly, I tell people also sometimes there is so much value in a no, because if I can give somebody honest answers, no doesn't mean never going to happen.
Yes.
It just may not mean not right this second.
Yes.
And when we say long game, we don't mean 30 years.
Right.
That can be 2 to 5 years, and you can still have a significant plan put in action during that period of time.
That's right.
Like we see this, with our kids that are in their early 20s.
Mm-hmm.
It's so hard for them to wrap their head around even 5 years down the road. But you put that small step and you take that first small step and you kind of forget about it. And then all of a sudden you've got options you didn't realize you had.
That's right. That's right. And I love the fact that you added in there too, like not only just for, your next home or your next venture, but investment opportunities as well,
Exactly.
too. Investing into the property you may already have
That's
at this
right.
moment in time, which I don't know if you want to talk a little about like options for that when it comes to that, because I think that's something that a lot of people may forget about, or just may not be insightful on it.
As far as investment.
Yeah.
So, something that people kind of fail to overlook is when interest rates go up, you can make money on your money.
Mm-hmm.
So, it might cost you more to borrow money. But like during COVID, for instance, CD rates, like 0.2, money market accounts, you were making pennies per year for a substantial amount of cash in the bank. That is not the case.
Mm-hmm.
So you can get a decent rate, maybe even 5% on a money market account. That's free money. Why wouldn't you move your checking or your savings over there and let that draw some money?
Heck yeah.
So it's just simple things like that. I recommend everybody get with some kind of financial planner at some point in their life. Nobody's going to ever charge you to do that, but to show you what you can do with your cash to maximize it. And it can be something as little as a couple $100. But there are ways to make your money work for you. Like, why would you just leave all of your checking and savings in a 0% yield account?
Yes.
Your bank may have something that they could swap it over to that you're making a little bit of interest on it. So that's how, like, some of these guys from the 80s, when rates were 15, 16%, they made a killing on investments because they were also investing their money. Maybe they had a mortgage at 17%. But they probably also had some securities or some stocks that they were putting in drawing crazy amounts of interest that compounds. So think about that.
See, I wish that was the stuff that I wish I started earlier on. I didn't
Same.
know those until like my mid 30s, and that's kind of where I was like, you know what, dang it, if I keep seeing all these, I mean, for lack of better source, TikTok videos and stuff like that.
Yeah.
Don't get me wrong, I love TikTok. But I'm just saying, not always the best place to get information. Just saying.
But still, I mean, like I have a little Robinhood account,
Yeah.
and it's nothing that I try to make money off of, but it's something that I'm like, hey, I want to experiment with this and see, like, what can I do here? So that's something on a smaller scale that people can play with and just like dip your toes into that.
Yeah,
because
exactly.
it's fun.
Yeah,
when you see your stocks turn green, you're like, whoa. Yeah,
It's always better. It's always better to start as early as you can, but it's always good to know it's never too late to start it.
True that. Absolutely right.
That's the big thing.
Absolutely
Same
right.
thing with me. You're young and you think you're gonna live forever, and you're not thinking about what you're spending. And we run into some, one cool part. I'll say a lot of this younger generation is very educated on a lot of that stuff, and we see into people's lives, and I'll tell them, like, you're doing it right.
Yeah.
You're doing it right. You're starting early and you're doing it right, and to be able to sit back and just watch people build wealth.
Oh,
is
definitely.
awesome.
Yeah,
It's
and
awesome.
this is people with normal jobs.
Yeah.
Okay, so we're not talking about somebody who has a $300,000 a year income.
Yeah.
These are normal people making a normal wage, that are able to make some shifts in their budget and make their money work for them.
That's right. And it's setting yourself up, you know what I mean? It's yes, for a lot of those, I think people kind of get stuck with like the fact that it's more like stocks and bonds where you can get the kind of quick residual or quick outcome within a short amount of time, where there's these other options that may be a little bit more secure, but they take a lot longer to kind of get there, but you still get there.
Yeah.
You know what I mean?
You got to start somewhere.
Yeah. I mean, I think the thing that kind of made me sick was I read something last week that's like, if you bought $100 of crypto like so many years ago, you would now be a millionaire.
Yeah. Yeah. And for a lot of us, I mean, imagine having done that and trying to explain that to somebody back when it was before it boomed.
Right.
Like, I had.
This is a drug dealer's way of laundering money.
Yeah.
That is literally what it started off as.
Yeah, exactly. So it's funny, like looking back at it now, because hindsight's 20/20. But like at the same time, you're looking back and saying, "Oh man, I wish I would have done it." But I picture myself back then when it was happening, and I was like, "That's dumb. You guys are gonna lose all your money." You know what I mean?
It's like, this is not legit.
Yeah.
There's no way that this is gonna work.
Right.
This is imaginary.
This is scam. It's gotta
Exactly.
be a scam.
Right.
It's
A
too-
lot of
too
it
good to
is,
be
man.
true.
But you can't. You look at Apple. You look at Google. I can tell you when I was a kid, man. If you would have told me that I could FaceTime somebody in Germany, immediately right then,
That's some Star Trek stuff.
crazy,
You know what I mean?
dude. But that's the world we live in. And to think where we may be 20 years from now is just. It's just crazy.
It's insane. We're in like the fastest growing technologically
It's crazy.
advanced, I guess, era of all time.
Yeah.
You know what I mean?
So,
not
do you
really
remember
me, for
Batman, like the old 1960s Batman episodes? And was it Albert that was his butler?
Alfred.
Alfred.
Yeah.
And then they had the watches, and they're
Yes.
talking to each other.
Yes.
Like, we have those.
We have those now. You know
We
what I mean?
have those.
Like, just imagine if like we went back in time and showed them what we have. So, I got one of those.
Yeah.
Like,
I mean,
this
I
is-
think about this all the time because, like, my great-grandparents were very, 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 very country. Never even owned a vehicle.
Really?
Like, they,
Really?
yeah. Yeah, like, they farmed all their food and
Mine
rode
was genuine, by
horses
the
and
way.
stuff. Oh, ha. But literally, I think if my grandmother was still alive and I took her an iPhone, it would rock her world.
You think so? What would she say? What would she
Yes.
say if you went and put it in her hand and just like, hey, just touch the screen?
I don't know. I've thought about this before. Like, I think it might cause an existential crisis. But that's crazy because in 100 years, so much has changed in how humans relate to each other. And like, we have walkie-talkies. You can be on Mount Everest and I can be in Hawaii and we can be talking to each other and looking each other's face.
That's crazy.
But I
That's
look
crazy
at
to
it
think
two
about.
different ways also. There's a part of that too that I kind of envy. Like, I don't know what that is. Like the simple part of life that it seems like we've gotten away from.
Yeah.
I can't imagine, bro. If I leave the house and my phone it doesn't matter where I'm going.
Oh,
And
it's
all three
panic.
of us
Yeah.
are the same way. We're turning around and heading
That's
back.
right. That's right.
Yeah, we're like,
You
oh
know,
my gosh.
You
Yeah.
get that instant panic where you're just like,
Yeah,
it's like, wait,
yeah.
Yeah.
You know, you reach for your
But I
pockets.
think it's important also with that is to create that separation sometimes. You
Yeah.
have to. You
Yeah,
have
yeah.
to get away from it at times. But man, yeah. I don't know what somebody from years and years ago how they would react seeing something like that.
That'd be pretty awesome to kind of see it.
Mm-hmm.
It'd be almost like people going like from like Back to the Future into the
Yeah.
future or
Yeah.
stuff like
I mean, I
that.
think
The
about that all the
almanac.
time.
Yeah,
I was
the
like,
almanac.
yeah, my grandparents, it was Flossie and Euless Ferris were my great grandparents, and it would literally like blow their minds.
I'm sorry, you said their names were what?
Flossie and Euless.
Flossie and Euless.
Yeah,
That's almost. It's almost to me. It's almost like a different name from a different country.
I know.
It's pretty interesting.
That's the kind of names they come up with now.
Yeah,
That's the new
that's
kids.
true, right?
Yeah, Blake's grandmother's name was Frosty.
Frosty.
So don't.
Yeah.
That was her
talk into
first
it.
name, like
Yeah, it's
her
Frosty.
God-given name.
Yeah,
It was her. Yeah,
Frosty.
Frosty.
Well, so is it
so cool.
Frosty Lyles?
Yep. It was Frosty.
She
Louise.
went by Louise.
Frosty
She went
Louise.
by-
Louise
she would
Lyles.
get
Okay,
furious
all
if
right.
you called her Frosty. So
I
Okay,
think
gotcha.
That's
All
the
right.
coolest name ever.
That is pretty cool. Like nowadays, I think that would be pretty popular. Watch, you're gonna have like about 65
Yeah.
kids named Frosty now
They
going
should have
forward.
had, yeah, they should have had one of the Frozen girls named Frosty.
Right? That would have been amazing.
It would have. Anna and Frosty.
Anna and Frosty. God, you know we're parents. All right, so I wanted to kind of get into a little bit of I'm kind of giving you a little bit of a curveball, but you know, we had those crazy refinances that happened through, you know, the COVID years and
Right.
pandemic. Do you think as though that may come back, or it's going to be like a bang or a bust? when
It
comes to that?
will, but what I do want to caution everybody on is if rates drop a half a point, every single person with a mortgage is going to get harangued
yeah,
by lenders calling them, wanting them to refinance.
Mm-hmm.
So here's what I would caution everyone against. If you do refinance, make sure that it's worth your while. You do not want to go through an entire refinance, roll in thousands of closing costs only to like drop your payment $50.
yeah.
That would not be worth it whatsoever. So you want to make sure that when you choose to refinance, you're getting the most bang for your buck. That's going to reduce your rate as much as possible, and your out of pocket is going to be no to minimal, and your fees are going to be as small as possible.
Absolutely.
So if you've only been in your house for like 1 year and the rate has only dropped 1/4 to 0.5% based off what you've got right now, it's probably not going to save you enough money to make it worth your while. I'm telling you this because there are a lot of lenders, the online lenders and the phone lenders that just call and call. They don't care. They just want a deal to get paid.
Preach.
Exactly. So they're like, we don't care that your payment dropped only $20 because I got a deal, I got paid. That was not the best option for that customer.
And one of the biggest misconceptions that a lot of people don't realize, whoever has their current mortgage, you don't have to use them to refinance.
Mm-hmm.
If you started your mortgage with us or some other local lender, when you start getting hit up with, hey, we can refinance you, and they are like vultures, man. I mean, they come out of the woodwork.
Yes.
True. that.
Call your trusted local person that you dealt with originally. And if you dealt with someone good, they'll be honest with you, and they'll tell you, now's the time to do it, now's not the time to do it. But if you pay it, if you get those letters in the mail or get these, we can save you X amount of money. Yeah, we can save you $50 a month.
Yeah.
They don't tell you how much it's going to cost you in the long run. It's not worth it.
Yeah, that's right. So you've got to have total cost versus actual savings. Look at the two of those, and is it going to be worth your while? So what I would suggest everyone do, if you are wanting to refinance, we tell people, hey, just send us your last mortgage statement, because what most lenders will do for you, work some scenarios, and that mortgage statement will give them enough information to kind of work up an estimate, see where you would be, and give you an unofficial cost without having to pull your credit or anything like that
Yeah.
prior to. So that's the thing. Cost is always a factor. So if it costs you $8,000 to save $30 a month,
Yeah.
then what have you accomplished? Except for getting that loan officer some commission paid.
Yep. So one of the things
I'm
that
just
we
telling
did-
y'all honestly.
Yeah.
Okay.
You
So-
take the factor of like how long is it going to take you for those $30 a
That's
month
right.
off? How long is it going to take you to make your money back?
That's right. So that's your recoupment.
Yeah,
So
so
your
I mean,
period
like-
of recoupment, and we try to tell everyone it needs to be less than 24 months. Your recoupment period should never be greater than 24 months.
So one of the big
a great way
things
to
that
look
we
at it,
were
by the
running
way.
into for a long time, Someone purchased a house a couple years ago and they had a rate at 2.5%, and then rates started climbing up. Business started getting slow. So we noticed and saw a lot of folks, hey, you can refinance your mortgage and you can pay off this credit card debt that you have here and just let's rock and roll and move forward. But when you think about it, why would you refinance a 2.5% mortgage to a 7.5% mortgage to pay off a couple $1,000s in credit card debt?
Yeah.
Now, it has to be the perfect scenario for you to do that, and it makes sense. And 9 times out of 10, it's not. So what we found, we were telling people, no, and we don't get paid unless we close deals. I mean,
Right.
that's how we make our living. But we were like, no, that's terrible advice. Don't refinance and affect your 30-year rate that you've got at 2.5% to pay off this minimum amount of debt over here because it sounds like a good idea.
Right.
Absolutely.
Talk to someone that you trust. Go through the numbers with them. It's got to make sense.
So yeah, everybody needs to be looking to refinance to save money. That's always a great thing to be looking out for. But don't just assume that because rates have dropped that it's the perfect time for you to refinance.
Right on. Again, read into the situation, know it, and be open to the conversation.
That's right.
Open up, basically open up your book of finances to whoever it is that you trust and
That's right.
under and anybody that's guiding you through this process. Okay, so I want to talk about we spoke about the elephant in the room a little bit, and I know people are probably like, "What's the elephant in the room?" But if you've been watching the news as of late when it comes to the real estate industry, if you've been on TikTok, if you've been on social media at all, it's kind of been blowing up. And it's something that I've really wanted to talk about for a while. Now, we've talked about it multiple times here in the office with, our principal brokers, our brokers, and our agents as well, too. We've got some really good insight. And, let's talk a little bit about the NAR settlement,
Okay.
the National Association of Realtors settlement, which they just settled on, I believe, $418 million settlement to get basically the settlement done that's been going on for quite some time now. Give me y'all's insight on what your thoughts are on this whole thing.
So I think the biggest piece, and correct me here if I'm wrong, but I think the biggest piece that a lot of people were concerned about was the ruling that the buyer's compensation can no longer be automatically paid out of the seller's commission on the
Correct.
listing.
Yeah.
So buyer's compensation is separate, has to be negotiated separately, and isn't automatically going to be included in the sellers, correct?
As of right now, yes, ma'am. Yep.
So I went through the entire mortgage industry crisis, which started like in 2008. So I kind of know emotionally what realtors are feeling right now because we were so attacked. There were so many things turned on its end. The entire way that the mortgage process was even disclosed was completely rewritten to try to regulate what some of these quote unquote shady loan officers were doing. Okay. And it really hurt because I was trying to be one of the good guys to help people. My colleagues were the same way. And we kind of felt like, why are we being penalized and why are we getting a bad perception in the public eye when we're just trying to do our job? So first things first, I understand how that feels. The second part of this is, I think it's going to end up being a great thing for realtors.
I do too.
And here's why. So anytime that there's been an event that has sort of weeded out people in my industry that didn't really have their heart in it and want to be there, it incentivized those people to just get out. Okay? Because the realtors, the mortgage lenders, the title agents, all the insurance people that have their value, their customers are going to know that and they're going to continue to work with them. And I've told, let's be honest, when we get a for sale by owner deal, we're like, oh my gosh.
Yeah.
We're like,
a tricky one.
like, well, gonna have to work like 20 extra hours on this one. Because as mortgage people, we know the value of having a great realtor team. It really does make a huge difference. And we can tell it's such a different experience for the buyer and the seller. They're educated. They know they've got a team taking care of them. So all in all, I think that this is going to be a good thing. All it's really going to do is change how all of this is disclosed on paper and how the contracts are written from the listing down. And I think once consumers kind of get a grasp on that, the same way that we had to have disclosures done separately, like, I don't know if you've ever heard TRID. So 2012 is when TRID came out, which was the Truth in Lending revamp.
Okay.
Where now we have the new loan estimates and closing disclosures with the 3-day wet signatures, 7-day electronic signatures. Okay, so it took 4 years from 2008 until 2012 for the CFPB to revamp the way mortgage lenders did business. And in between that 4 years, we were getting crucified as like the people who destroy the real estate market.
Jeez.
Yeah.
So I completely agree with you there, because I do think there's been a lot of talk and a lot of commotion, and a lot of people are super nervous about it, which I understand. It changes things. You know what I mean? I get it. But I think the big thing is that it's going to, like you said, change disclosures. It's going to force us to, or for those that don't already, to disclose this information so that people know what their options are. So it's not always, it's this way or no way at all.
That's
you know
right.
what I mean, I do think that there's a little bit of a misconception with, especially the news outlets out there that are kind of fear mongering, or also trying to give some false advertising or false marketing, saying that that sellers don't have to pay commission.
Right.
Or they're not going to be paying commission. And they're just going to save completely on commission. Yes, sellers are going to have have always had the option to go ahead and say, no, I'm not going to pay for a buyer's agent commission.
Right.
And it was on us to disclose that. And
Correct.
it is in our contracts as far as here in Arkansas.
Right.
But I think the big thing is, again, it's for those that have been doing it, that have been the good guys,
Exactly.
that have been doing their job and disclosing this type of information. It's not going to change much, except for our process of having to get the paperwork done on the front end.
Yeah.
Exactly.
And even though, again, it is in our exclusive buyers agreements, but now we're probably gonna have another document that's just going to add to it. If that is what's making you upset of this whole thing.
That's right. And, if you are a realtor and you know the value you're bringing to the table for your clients, don't worry. Don't worry. Because that was the thing that I tried to look at it. Hey, they're trying to literally make it impossible to survive as a mortgage lender. I did survive through that terrible period, and I came out better for it. I had more referral relationships. It was difficult just to wrap your mind around. The thing that I want to let everybody know is anything on social media or, the news media, any sort of hot topic is going to try to be made into a controversy because it makes money off of views.
Yes.
Okay, so a lot of these people with their hot takes that are controversial are trying to get some traction on social media. So don't think that every person on the news or TikTok is an expert at what they're saying.
That's right.
Something else, each state has different contracts. And I wanted to go back to that because Arkansas contracts are awesome the way that they're already structured. We're licensed in a few other states, and their contracts don't have those clauses or provisions in there like Arkansas already does. So those realtors are going to have a lot more learning curve on how this is going to come to pass.
Absolutely right.
So if you're an Arkansas agent, that's great.
That's right. Yeah. So what I learned, I didn't notice until this whole NAR settlement kind of came out, was that only 17 out of the 50 states of the U.S. are obligated to have some sort of exclusive buyers agreement.
That's right.
And Arkansas is one of them.
Yep.
And I didn't realize that. So that's where the majority of this frustration is coming from, is from those, which, like you said, that aren't used to that. They're going to have a huge learning curve now.
And it is very different in those states that don't have their contracts written like that. Arkansas is not a buyer beware state either, correct?
Correct.
So that's another great thing. If we lived in a state that was a buyer beware state, and you had a buyer that chose not to have their own agent, the seller would be under no obligation to disclose truthfully about the property.
Absolutely right.
So those are situations that I could think in my mind would be worst case, where you have a buyer exposed and nobody's really digging into the property or what went on. So that's another great thing, because Arkansas is not a buyer beware state. The seller is still going to have to disclose everything required by law.
Right. Absolutely right.
And it goes back to what we said a while ago. This is one of these things you don't control. And I was told a long time ago when I got into the business, if you're in this business for the right reasons, everything will work out. If you're in this business just chasing a dollar, that's going to end. So I think it's like, goes back to what you guys are saying. It's like the mortgage side. It might weed some out, that doesn't, it's not going to continue to be in it. I mean, that's a possibility. And I was thinking about this the other day. JC Golf would be eating this up, man. Like I remember going to him and saying, dude, you just, how do you deal with this? Like if a problem arises, you handle this like it's unreal. I mean, just the way you take charge. He's like, I love it, Mike. I love it. And I thought when this was all coming down, he'd be sitting here, man, his wheels would be spinning. Right. How are we going to navigate around this? How are we going to figure this out?
Absolutely right.
So that
one of the values of our company is embrace challenges as opportunities.
Yep.
So, and that really is a huge mindset shift that can change things for you. Because if you see this quote terrible insurmountable challenge, if you're like, guys, I don't know about you, but if you're thinking what I'm thinking, we could really maximize on this.
Yes, absolutely. So it's kind of like we're a couple things that kind of come to mind whenever you guys speak about this is adapt and overcome, right?
Yes.
And then also embrace the suck.
Exactly.
Right. Embrace the suck. You know what I mean? Like, so if something comes in challenging, then take it head on and
That's
see
right.
what you can come out from it.
Exactly.
That's what the real success really comes from is from people that are able to confront these type of situations and then find a solution for it, or find something to adapt it and make it better.
That's right.
So it ain't just going away.
It's not.
No.
You may go away,
right?
But it's not going away.
That's right.
So
and especially in this industry that's ever evolving.
Yeah.
You know what I mean? We're it's never going to change. The only thing that's consistent is the fact that it's ever evolving.
That's right.
That's
And I feel like, professionals like me, you, Blake, we're the thing that doesn't change. Okay, so we're here, we're absorbing all this information, and I feel personally that it is my calling to simplify this for my clients. I can take and absorb all of this stuff that's coming in, and that's my job, is to break it down and simplify it for other people.
Yeah.
So I feel very blessed that I can do that for people that need me.
Absolutely right. Absolutely right. So let's play a little kind of devil's advocate here. So we understand that on the seller side that they're gonna absolutely have the option to not have to pay for the which again they've always had, but the sellers will have the option to not have to pay for the buyer's agency the buyer's agent commission. Excuse me. Now, what about from the buyer's side? You know what I mean? Like, what is that going to change for them now? Because now, if going into a deal, obviously we're going to let them know, because we've already been letting them know, especially with for sale by owners. There's a possibility that that with this for sale by owner, they may not want to pay for any type of commission. In that case, the commission would have to come from you as a buyer. Now that's going to be even more of a conversation that we're going to be having on a regular basis.
Right.
For even any listing that's on the MLS. What's it going to do to them now, where or at least what's it going to impact the amount of buyers that we have now for those that come in and say, all right, now they have to pay for closing their own closing costs, and now they also have to pay for the buyer's agency commission, which I'm not saying is wrong. I think it's fair. I think it's fair. We're but what happens? How does that get impacted in your mind?
I think that the way that it was originally set up, where the seller paid automatically the split to the buyer's agent commission, it was set up that way to help buyers. Okay, so right now it's not really being presented that way. They're presenting it like the NAR has a monopoly on the MLS. Well, going back and looking, it was set up that way to help buyers. Okay, so let's break this down. If you're a first-time home buyer, and let's say you are pre-approved for $200,000 on an FHA loan. All right, so your down payment's going to be 3.5% of $200,000. closing costs are going to be between 3 and 5% additional of that sales price. So if you're looking at that and you're a first-time home buyer and you don't have rollover equity from a property you're selling, that's another big chunk to look at for closing costs and paying your realtor out of pocket.
Right.
So if you are selling a home and if you're a listing agent, I think it's very, very important to discuss these points with your seller.
Absolutely.
Our market is very heavy VA, FHA, and USDA. Okay, so for instance, we're licensed in Texas. Some of those markets down there, like Austin, Houston, Dallas, their loan amounts and their price range is so high that they do basically all cash conventional.
Yeah.
Okay?
Yeah.
That's a very, very different market than here,
Absolutely.
where most of our people are relying on those government loan programs and like active duty military. Great qualified buyers, but they don't tend to have a ton of cash saved up, especially if they're younger.
Yeah.
Okay.
Yeah.
So it's really important for sellers to understand, in order for me to get the biggest pool of buyers attracted to my property, it's not about paying the realtor. Okay. It's about assisting that buyer purchase your home. That's the whole reason it was structured that way.
Exactly.
Now, COVID made things so crazy because so many people made so much money in real estate. There was so much property bought and sold, and then the volatility of the interest rates. So I think that right there is what shifted the perception of this was set up to essentially help buyers. It turned into something where they're like, oh, the NAR is creating monopoly on the MLS and blah, blah. You know, I understand why it was implemented to begin with.
Yes. Exactly. Yeah. So it's to kind of, piggyback off that, there's, yes, it was implemented to go ahead and help the buyers. At the same time, I think we got to realize that, the sellers may be gaining something on the front end, but most sellers are going to be buyers as well too.
Exactly.
Either, right away or eventually.
Exactly.
You know what I mean? So it's, imagine, you may have a scenario now where you go ahead and you say, all right, you know what, to get more buyers in here, or to help more buyers that are maybe not have the amount of funds that
That's right.
will be available, let's go ahead and have a commission there for their buyers.
Exactly.
Agents. But you may not find that on the other side now.
That's right.
So you may be paying, commission on both sides of a deal.
That's right.
I mean, you're going to pay your commission no matter what on both sides, because you still have to pay your listing agent. But
that comes out of the proceeds.
Yeah.
So that's the thing. It's like not something, that's factored in, and you still know what you're going to net.
Right. It's not cash out of pocket, but yeah.
That's right.
Yeah.
So if you're a first-time home buyer and you're having to pay down payment and closing costs, hypothetically, and then you also have commission out of pocket, that's a scenario where even if a customer could do that, it may drain every bit of their bank account.
Oh, absolutely.
So we would just like to see them have some cushion when they get into that home. So it's not something where sellers have to do this or buyers are not going to be able to. It's not that. It's that this is something to help things out, and it's to keep that huge chunk from being due all on the weight of the buyer.
Exactly. Yeah.
That doesn't have rollover equity, because mainly who we're talking about that this will affect is the first-time home buyers.
Right. Absolutely right. So what's your thoughts, kind of talking about that, what's your thoughts, do you think that the lending industry is going to have any type of aid or any type of something built in, kind of how we did for, when the rates were going back up and everybody was kind of doing those 2-1 buy downs? Is there going to be something that you feel as though the industry is probably going to implement to try and aid those to kind of counteract that?
I think so. So like Fannie Mae has it's like a super low income credit of $2,500 that they're doing right now, which isn't a ton. I really don't know how this is all going to pan out, because mortgage is really geared on, interest rate, loan amount, closing costs, and prepaids. We've never really delved into this side of buyer's agency commission. So I'm very interested to see. I do hear a lot of chatter, though, about how can we devise something to help our realtor friends. How can we work something out to help our first-time home buyers that need guidance on still obtaining a buyer's agent? So I do think that there are going to be some things organized to at least educate and make this an easier process for people to understand.
Okay. Unofficially, do you have any predictions on what you think might happen as
Oh.
far as that goes?
I think the worst that's going to happen is it weeds out some of the agents that really that really weren't in it for the right reasons. Because if they're like, oh, well, this is stupid, like you said, if it's redoing your disclosures in a different manner that's really making you give up, then were you cut out to be a problem-solving real estate agent to begin with?
Absolutely right. Absolutely right.
It's just like us. When you go through rates doubling in a period of 24 months, and we had a lot of people that had to just ask themselves, am I even cut out for this?
And what you guys lost? The industry itself lost like what? What was it?
I think we've lost about half of the origination force.
Yeah.
Wow. That's not a small chunk. We're talking about half.
Yep.
Half is a huge number of people in the industry, and I think real estate was very close to that as well too.
Yeah.
I think we're about like 32%, something like that, some around that range. Maybe just making that up, but completely. But
Yeah. You have to think, too, a lot of those statistics are usually like a quarter behind.
Yeah.
So it could be even more than that now.
Yeah, exactly. And that's also, I mean, who knows? I don't know if that could have been, because I think the statistic still is, I think the top 15% of real estate agents are doing 90% of the volume.
Yep.
So that other, 85% might just have been like, all right, you know what? Now I needed a sign to kind of get out. This is probably my sign. I need to
Right.
get completely out because they're
That's
just
right.
not that active. So does the lending side kind of do the same thing? Do they have that type of situation where you have somebody that is licensed but it doesn't really practice it that often?
A lot of brokers will do that, so some mortgage lenders will just get their broker's license and do a few deals here and there. But it's kind of like they'll just want to do a deal, get some cash, and then move on. So they're not really the career type things. So yes, you have a lot of part-timers that will want to, originate mortgages, but then they quickly realize this is not a part-time career.
Amen. Amen.
Yeah.
So you either got to be in it or not.
Yeah, that's right. Ain't no part-time agents either. So.
No.
I mean, you may, but it's probably for your own deals or something like that. But
That's
again,
Maybe in your head.
Just I was trying to be nice, I guess.
Yeah.
All right, so let's kind of switch it up a little bit. I know because there's going to be a lot more information. I think from between now and July, there's going to be a lot of changes. And July is when we're
Right.
going to find out exactly what all is going to happen moving forward. It may not be completely implemented, but there's going to be changes from then on with the next couple of years. Just like you said with was it TRID?
TRID.
TRID?
TRID.
TRID, so with TRID, so it might be kind of the
Yes.
same scenario. I hope it's not that long. I hope it's not 4 years that it takes
Yeah.
before they kind of get to that point. But I think we're going to have some big changes here. I know we're going to have some big changes here in the industry
Right.
within the next year or so.
Yes.
All right, let's switch up a little bit. I do want to talk about you guys are actually one of our executive sponsors for our Easter Edge Hunt coming
Yeah.
up March 30th. From 10 to 12 over at the Cabot Sports Complex. Little plug. But tell me a little bit, kind of, because you guys are always sponsoring all our events. I don't think there's ever been an event where you've missed any of our events. And we love you for it. And you guys are amazing at what you guys do. And we love your support as well, too. But give me your thoughts on kind of what you feel about the Edge events and kind of what goes on in that world.
Oh man, it's awesome. And speaking specifically about the Edge Hunt, that's coming up, like we were talking the other day at the office when you stopped by, just being able to meet clients and people that you've never put a face to, and then watch the kids go out and have a blast. And anytime the community comes together and we can be a part of that, and you guys are always a part of things with the community, we love it. We get stuck a lot of times sitting behind a desk working numbers, staring at a computer screen, and we don't get out and meet our people as much as you guys do, taking them through the houses, doing inspections and things like that. So it's special for us to be able to get out anytime there's an event, that's involving the community, and just watching our area. Man, we've been so fortunate and blessed just to see it grow. Our office is in Cabot, and just watching that place just grow over and over and over, people coming in. It's awesome, and we love being a part of it.
Yeah, and I love that Edge always does stuff with the community because, Blake and I talked several years ago when we first teamed up. And we always wanted to be involved in the community, have a presence locally. And that's a big deal to us because, you know, we want our customers to know we live where you live. Our kids go to school with your kids.
Yeah.
It's a big deal to us to be plugged in with the people we serve.
Definitely. I'm super excited about it. And I'm excited for, you know, having people like you guys that are always behind us on these type of situations and aid in any way, shape, or form you can. And it's not just financially either, but it's you know, in more ways than one. We appreciate you guys so much for always being there for us.
Yeah, you guys have an awesome group, and it's always good energy. It's always a lot of fun, a lot of smiles. So we love it.
Well, without you guys, we can't do what we do either. So we really appreciate you guys. I know, you know, what's what are you guys gonna get on some hunting this weekend? Some egg hunting?
Man, you don't want me out there. I'll get them all.
Yeah. So the thing is,
are you as many other kids going through the crowd?
Our whole family, we are so competitive.
Yeah.
Like we can't play board games.
No, we never finish it, dude.
So
I beat them all and they get mad.
Yeah, Blake will be like, Steph, you're not hunting Easter eggs, you know, because you'll see me out there like bowling over toddlers to get the golden egg. Not really. But yeah, I've always loved like Easter and 4th of July. I don't know why, but I love these holidays where you got a lot going on, a lot of noise. And I'm just really excited about spring being here.
Oh, for sure.
Yeah.
And one of the awesome parts about just like this event, man, we're not talking about mortgage. We're not talking about real estate. We're not talking about the industry.
Or the NAR settlement.
And the NAR settlement.
Yeah.
We're just having a good time. And that is important, man. I mean, especially with us in this business, you know, just to be able to separate sometimes, get away from it. Those things are awesome.
Thank you. I agree 100%. We're all super excited. We're excited to have you guys there and just kind of see everybody kind of come back together.
Yeah.
Last year was kind of our first official one that we had last year, and it was different. It was different. We definitely didn't know what we were doing back then, but I promise you, like we met. I think it was that Saturday that we had the event. That next Monday, we all met up and we're like, okay, this is where we can make some changes. This is where we can probably improve a little bit. And so, like, we sat down for about almost an hour and a half, 2 hours, just coming up with ideas of stuff that we want to do for this year. And I think we're not all the way there, but we're getting there because it's going to be a lot better than it was last year for sure. I know for certain it will be.
Great.
So I'm excited to start off with like the eggs. Or a big issue for us. You know, I think we only had like 1,500 eggs, which at the time we were like,
that sounds like
a
massive amount.
Yeah.
I mean, yeah,
that's what I'm saying. So
sounds a lot until you have 1,500 people.
Yes, exactly. And then you see them go out there and you start to hunt, and it takes less than 15 seconds, and you're like,
right.
All right,
Especially if you got somebody like me out there, you know, grabbing them all up.
So this time we got over 7,000 eggs. Shout out to Bethany Kid on that one.
Dang.
It's an awesome way to she got a bunch donated, and also she picked up a lot. Like following a couple days after Easter, she went out and actually found a couple places that had like a load of eggs for super cheap.
Awesome.
They discount everything. So I think that was awesome on her. And
good work, lady.
The pleasure of loading those things up, man.
I don't know.
Y'all's just like, why'd you say that?
Gosh, like proud to delegate that.
Not
Right.
releasing this video until after.
Edit that. That was good.
Yeah.
But it's gonna be a good time. We're super excited. Man, is there anything you guys want to, you know, before we wrap up, is there anything you want to put out there to the public? It can be, you know, something about the industry or something just local, super hyper local for here in Central Arkansas that you want people to kind of know about. You know, just do something, do better.
Man, the biggest thing I could say, and this is from a business standpoint, and we preach this all the time. Use local. You know, use local folks. Keep it in your community. As far as, you know, you've got insurance people, real estate agents, lenders, title. There's so many of us in this industry, and anybody can pick up a phone and call a 1-800 number, or you have these big companies that spend millions and millions and millions in advertising, you know, but put it back in your community. Those are the people that are there with you. Those are the people there that are definitely wanting to make sure you're taken care of because you're going to see them every day.
Exactly.
You know? So, just pour into your community, get involved, whether it's your local church or whatever, just something in the community, get involved with that. But yeah, just using local. It's big for us.
Exactly. And I don't know who needs to hear this, but everything's going to be okay. Everything's all right. I mean, we've had a lot of our friends and, referral partners the past couple of years. It's just been very, very stressful in business. And so we've seen a lot of conflict that probably didn't have to be there. So I just want to remind everybody, what we do is important, but it's not the be all end all.
For sure.
And so if things get crazy in this business, remember you're dealing with human beings. And it's still going to be okay.
Man, I need to hear that. I know. Sure.
Yeah.
Yeah.
But yeah, that's super, super true. Yeah, I don't want to add anything onto that because that was perfect. That was perfect.
Awesome.
But all right, so tell everybody kind of where to find you guys, how to get in communication with y'all, and all that good stuff.
So we have a pretty big presence. Our social media, the Lyles Team. Go on Facebook. We've got an Instagram. You can go to our website, LylesTeam.com.
Yep.
Our main office is actually in Cabot at 2120 West Main. It's a big blue building. You cannot miss it when you drive by. But yeah, I mean, find us on Facebook, shoot us a message. We're here to help. That's what we're here
And
for.
we are licensed in Arkansas, Oklahoma, Texas, and South Carolina.
That's right.
So like Blake said, our website is thelylesteam.com. That's usually the best way to find our contact info.
Awesome. Reach out to them if you guys if you have any questions about the process, if you want to get in touch with somebody that knows the industry, has extreme experience, and also will be absolutely honest with you. Definitely hit up the Lyles Team from Sente Mortgage out of Cabot, Arkansas. They like they said, they can give you insight on what the market is, on if it's a good time for you personally to buy or sell, and then on top of that too, that it'll be insight on if it's not a good time, that they can tell you how to get there. That's one thing I love about you guys, is that you guys are educators as well too. Not only are you professionals, are you experienced, but you guys are educators. You want people to understand what the process is and to empower them. That's a word that we like to throw around a lot, but it's a true
It is
thing.
true.
We want to empower you guys, so you guys know knowledge is power. With that knowledge, you guys can pursue the most educated decision that will fit your needs and your family's needs. So
Well said.
thank you guys so much for everything
Thank
you
you
guys
for
do.
bringing us in.
Not only just for the podcast, I'm so happy I was able to get you guys both here for the first time in
Yes.
forever, because you guys have each been on the podcast separately at some point in times, and it only took 4 years, but it's okay. We're here. You know what I mean?
That's right. We're here. We're here.
But all right,
See you in 4 years, buddy.
that's right. I hate you. No, I love you guys. Thank you guys so much. I appreciate everything you guys do. Again, if any of this information was helpful, if you find any of this helpful for your situation or somebody else that does, please share it with them. Please comment down below, tag them, and hopefully we can give you guys a little bit more insight on what's going to be the best route for you. And also make sure to check out our Instagram, our Facebook as well too, and our YouTube, where we'll be putting the whole entire episode on YouTube, and Facebook and Instagram usually has some awesome clips of some awesome nuggets from these amazing podcasts with amazing guests. So again, my name is Yashua Suarez. Thank you to Stephanie and Blake Lyles from the Lyles Team at Sente Mortgage. I'm with Edge Realty, and until next time, we love y'all, and y'all have a blessed day. Bye, y'all.
Yeah.